Let me talk to you about 10 mistakes that you need to avoid when choosing your business entity. The thing is that a lot of folks are starting new businesses every single day in this country, but the choice of the business entity is really, really quite essential because if you have the wrong business entity, this could actually invite business like legal problems. Like you can have some risks in terms of operationally speaking. So it's really important to choose the right business entity. So the thing is that starting a business is really exciting, right? So here's the overview I want you to pay attention to. It's really exciting. Everything is happy. Everything is good. But it's important to think through which type of business entity makes the most sense for your company today and down the road. This is really important. So what I'm talking about today, yes, of course, you're opening your business in year one, okay? But what about 10 years from now? Okay, what about 5 years from now? What about 20 years from now? So as you make your decision, you also want to steer clear of 10 mistakes that entrepreneurs in this country make when selecting a business entity. By the way, when we talk about business entity, we're speaking about what? LLC, we're talking about S corporation, C corporation, LP, LP, and so on and so forth. So LLC, limited liability company, S corporation, C corporation, LP, limited liability partnership. There are cases where you can also have a general partnership, okay? And so the whole thing here is that you have a diversity of business entities, but just remember that the business entity things, they happen at the state level. You do not have to file any paperwork for you to be registered for your business at the federal level. Now, of course, once you register your business at the state level, you actually file paperwork to get your EIN. There's no paperwork to really file. You just go to a website and you just apply for an EIN. And EIN stands for Employer Identification Number. So you got to have those two, okay? So just make sure you have that. Now, there are some cases where your business, depending upon the industry you're in, might be required to actually register with federal authorities. Okay, it's one of those things where recently we have a new law. It's called the ALC law. It's Corporate Transparency Act. So basically, even if you are even if your LLC was formed at the state level, you still need to actually you need to provide data to the federal authorities through FinCEN. Boss, welcome back to the show. It's really a pleasure to have you here. Make yourself comfortable. You are going to enjoy today's conversation. So here are the steps I really want you to really pay attention to. So the first mistake that you need to avoid when choosing your business entity is not forming an entity in the first place. Okay, basically, so you are just operating a business and you want to basically remain a sole proprietorship. Now, sole proprietorship is very simple. Yeah, you can think it's very simple. You don't have to file any paperwork, whatever. But think about the risks here. Think about the protection. Think about the level, the granularity, the depth and breadth of protection, legal protection, and risk protection to your personal assets. Something were to happen, somebody were to sue you, they're suing your personal assets. Okay, so it's really important to understand that when you have failing to form a legal entity for your business is really bad because first of all, let's talk about the risk to your personal assets. The biggest upside to having a legal business entity is that it provides a buffer around your personal assets, which would otherwise be jeopardized in the case of financial hardship or litigation. And so a limited liability company, for example, is one of the simplest ways to protect your assets and reduce your financial vulnerability. And you also have risk to business credibility. So that's really an important risk. And then you have also risk to your brand. So choosing to file a legal business entity means your business is registered with your state and is able to be marketed and advertised. So without legal information, any marketing efforts you make could be waylaid by other legal businesses choosing to use the same name or by legal action due to a trademark infringements. The second mistake here is the first mistake, not forming an entity. The second mistake here is failing to research your options. Okay, so basically the thing is that don't say, well, everybody wants to have an LLC. But the question is an LLC is the LLC the right type of business entity for your specific sector or for your vision, for your business model? Because some business models will invite another business entity. For example, if you are going to seek investors down the road, a C corporation is way better than an LLC. or even an S corporation for that matter. Boss, I want to quickly remind you of today's topic. We are having a conversation about the top 10 mistakes to avoid when choosing your business entity. The third mistake that you want to avoid here is to focus on short-term rather than long-term plans. Okay, see, the whole thing is that when you start a business, of course, you really are thinking about 1 year from now or 2 years from now, but you got to think long-term, especially as I just told you, depending upon the business model that you have. If you change the business model, you want to be flexible enough so that you can actually invite other stakeholders in your business. I gave you earlier the example of an S corporation being a great being a bad example if you want to seek investors, because if you have an S corporation, all investors must be U.S. citizens or U.S. residents, so you can't really have investments from foreigners, right? So this is why. Today, when you start your business, you can say, you know what, I will never get fund. I'll never seek funding from foreign investors. But you never know down the road. You never know how how your business situation will change and what your needs will be. So it's really important to think about those things in advance. And also, when we think about taxation, everybody thinks about, well, with C corporation you have double taxation. With LLC you have like one taxation, if you will, like personal taxation. But the thing is that there are some benefits also to having double taxation, because with a C corporation, basically you can write off a larger portion of business expenses, and even if you have business losses, you have the carry forward sort of rule as well. Another mistake that you need to avoid is to consider tax advantages alone. So the whole thing is, when you have a business, when you are thinking about choosing a business entity, you should not really think necessarily about. I mean, you got to think about the tax perks, that's for sure, but the fiscal benefits should not be the only criteria. So that's why you want to really think about your business model, your growth prospects, the goals. You want to think about the industry you're in. Okay, so tax treatments can be complicated and fluid. So you want to balance those with liability concerns, government requirements, and ultimately your vision for the business's future. This is very important. Another mistake that you really want to avoid when forming a business entity is not considering the tax implications. So your taxes can vary widely depending on the business structure you choose. So it's really important to carefully weigh your options and know you have to know what really works for you before you actually file. Especially, you want to think about exactly how much you will pay and what you will be required to pay every so often. Okay, so lack of planning and research into tax implications for your business entity could be a costly error, but it's easy to overcome when you keep a few of these considerations in mind. Understand pass-through taxation. Okay, so LLC and S corporations are both subjects to pass-through taxation, aka simple taxation, which means what? Your income is actually filed through your personal tax return. However, it's important to keep in mind that while LLCs do not pay corporate tax, you will need to pay self-employment taxes, which are typically around 15% of your profits. So understanding exactly what you will need to pay as an LLC owner is key to minimizing your financial burden and preparing for tax time. So also need to understand S corporation election. There is a way for LLC owners to potentially reduce their tax burden by electing to file as an S corporation. So S corporation election with Form 2553 can lower the amount you will pay in self-employment taxes by dividing your profits by salary and distribution. So it's one of those things where you are actually adding a layer of I would say flexibility, of tax flexibility into your S corporation's financials. But remember, S corporation is only a federal financial election, a federal tax election. So most states do not have a S corporation as a legal entity. Okay, and you also need to understand taxes for S corporations and C corporations. Remember that a C corporation may be appealing due to write-offs and lower tax rates. However, it's also subject to double taxation, with all profits being taxed as both corporate income and dividend income. S corporation provides the same pass-through structure as LLCs and do not require corporate income tax. So it's important to understand the difference when choosing your business entity. Also, I want to quickly remind you of today's topic. We are having a conversation about the top 10 mistakes to avoid when choosing your business entity. Another mistake that you need to really avoid here is to keep it casual, keep it too casual with multiple owners. Okay. So when forming a partnership or LLC with people you know well, you may be inclined to skip all the official paperwork. After all, you're friends, right? This is a big mistake because long-term ownership situations or in case of separation all need to be accounted for. So the more specific the agreements and terms, the better. So the good news is that it's fairly easy to avoid these common mistakes simply by exploring all your options, thinking about where you see your business going and growing in the years to come, and being sure to formalize any business relationships. Okay. And another mistake that you want to avoid is not allowing for future growth. You may be a solopreneur now, but do you expect your business to grow and potentially take on partners or shareholders? Are you hoping to find investors to back your business goals, for example? If so, the entity that you choose could also play a large part in the future growth of your business. It could also have a major impact on your bottom line. So keep these considerations in mind. So, as corporation ownership limitations, right? I think I just mentioned that. I mentioned this a little earlier. So, as corporations are not permitted to have more than 100 shareholders, and foreign investors are not allowed. What about multiple LLC members? You can certainly add members to your LLC, but you will need to consider their role and percentage ownership. This could have major financial implications if the company goes under or if there are disagreements in how to operate the business. What about C corporation ownership? While C corporations are generally structured to allow for greater long-term growth, they are also more complex and subject to greater regulatory and compliance standards. So those are really important elements to think about. So before you actually choose your business entity, you want to sit down and create a business plan that details your goals and expected growth based on how you see your business evolving. You can choose the structure that will grow with you over time. And that structure, as I said earlier, it has to make sense not only in terms of how you operate the business, but also how your customers view the business. Another mistake you want to really avoid here is to like not putting proper protections in place. Let me explain a little bit. A legal business entity will help protect your personal assets, right? But that alone is not enough to mitigate all the risks that come along with business ownership. When you think about it, you got to really cover your back from multiple angles. You will need to consider other ways to reduce your business's vulnerability and protect it from legal and financial risks. Okay. Now here are a few risks that you need to think about. Business insurance. So no matter the size of your business, insurance policy is critical in protecting it from unplanned events. And so your coverage needs will vary based on the business type and size, but a quality insurance provider can customize a plan that fits your needs. What about trademarks? Well, while forming a legal entity is the first step in protecting your business and registering its name, it's not foolproof. So businesses in other states could also register your business name or use elements of your logo. So the surest way to protect your brand and eliminate the risk of future legal costs is by registering a trademark. What about business licenses? So while a business license is not always required to operate your company, you may need one depending on your industry and the state of formation. Now, some states are pretty strict when it comes to that, and some are not. So it's important to keep business licenses current to keep your doors open and avoid fees or even closures. So the whole thing here is that if you have a business plan in place, this will be very, very helpful because you can actually now understand exactly what kind of actions you need to take to actually officialize the relationship that you have. And it's also really kind of cool because it gives you all the ins and outs that you really need to understand before you make the right decision. So you need to actually take those into account no matter what. No matter what, you need to take those into account. Another mistake that a lot of business owners or entrepreneurs make when choosing a business entity is failing to separate personal and business finances. So using your personal finances for business is really a misstep, no matter which entity you choose. So it may be really tempting to manage your finances from a single account, but that causes a number of issues that could impact your business growth and success, including what? You might have a risk of tax audits, you might have difficulty establishing business credit, you might have lack of financial insights. So when we talk about tax audits, taxes are hard enough to manage anyway. So, but when you don't have a clear delineation between your personal and business finances, it's going to get even messier. Okay, and so this is something to really think about. And separate finances make a tax time process easier, and also reduce your risk of being audited by the IRS. You have difficulty establishing business credit. So if you don't have a business bank account, let's say you look for anything and they don't give it to you, you are going to find it nearly impossible to take. Like you're going to find it nearly impossible to take out a business loan or a line of credit. You may also find it more difficult. And we tested this, more difficult to receive business financing and loans when you are not coming to the table with only your personal credit history. You also have a lack of financial insight. So, more importantly, if you don't have separation between your personal and business finances, you're going to have a much more difficult time getting a clearer picture of how your business is performing in the first place. So, this is really important. And so, what you want to do is you want to really understand that you are able to generate some revenue. You are able to set up your business entity the proper way. You again, if you steer clear of those ten errors that I just listed into this conversation. But again, the bottom line here is that you need to actually take actions first to make sure that you are actually on the right path to fixing them. Because see, there are many mistakes that you can make, but if you are a business owner, this is your first day, definitely will be you'll be making some mistakes, that's for sure. But the thing is, it's just the magnitude of the mistakes, because you do not want to have like a major mistakes that will really cripple your business. You want your business to actually be still be in business. So this is kind of important to really keep in mind so that you don't make some kind of crazy mistakes, and they are impossible to recoup. All right, let's quickly recap here. So, in today's conversation, I was just talking about the top 10 mistakes to avoid when choosing your business entity. So, number one, not forming an entity. Number two, failing to research your options. Number three, focusing on short term instead of long term plans. Number four, considering tax advantages alone. Number five, not considering the tax implications. Number six, failing to keep it casual with multiple owners. Number seven, not allowing for future growth. Number eight, not putting proper protection in place. Number nine, failing to separate personal and business finances. Number 10, thinking an online company information service. Thank you so much. God bless you. I'll see you next time. That's it. And remember, stay marvelous.